There we go. Awesome, YouTube. We're live. Good morning, everybody. Welcome to the Premarket Prep session here for what is this? April 3rd, 2024. Q2. Continuing the momentum of Q1 as we cash out on Oxy and other tickers on that long call swing front. It's been a record, Q1 of 2024. Looking to follow that up with a record Q2, and we've done so thus far. Despite the rainy conditions here in the DMV area. So as always, this is our daily session where we go over the important news, notes, analysis, trade ideas, mindset, expectations that are key to success in markets over the course of the week. So welcome. We're here each and every day, and we only got one goal, one ambition. And that's to get 1% better. So make sure you throw those ones in the chat, whether you're watching live or via replay, to signify your intention to get 1% better. I don't want you here, if you're here passively, you're just stopping through, I want you here with coherent, right, and clearly outlined goals, and you're here for a reason, and you're looking to accomplish those goals. People with intention, right, because it takes intention to get repetition. You don't just kind of fall into success multiple times in a row. You might, accidentally succeed once, but in order to do that 100 times, you need some intention behind it. You need a system. And that's what we do here: intention, systems, and execution, baby. So good morning. I'm excited to, dive into what we got going on today. And I'll do exactly that with our top news relating to Disney. Headline is, oh boy. So it's a decision day for the future of Walt Disney, ticker DIZ, as shareholders settle a long in the making battle over the company's 13-member board. The House of Mouse's annual meeting is set to begin at 1 p.m. Eastern Standard Time, so stay tuned on Seeking Alpha for live coverage in the afternoon. The drama is also far from a by-the-books affair. Disney is facing the most expensive proxy fight for board seats in history on two separate fronts. Now, fresh blood activist investor Nelson Peltz and his Trian Group have put forward Peltz and former Disney CFO Jay Rasulo for a pair of seats. His biggest aim is to accelerate media profitability and clarify Disney's streaming strategy after overpaying $71 billion for 21st Century Fox in 2019. Also to be reviewed is the creative engine at Disney's movie studios and clarifying items like CEO succession. Elsewhere, Blackwell's Capital is pursuing 3 board seats and has raised the prospect of splitting Disney into standalone public companies, as well as objecting to Peltz's plan for the board. Now, as of this morning, Disney management was in the driver's seat after its biggest investor looked to back the company's slate. Vanguard Group holds some 8.3% of Disney and is reportedly voting for Disney's nominees. That means with more than 60% of votes counted, Disney's nominees are leading the competing slates from Trian and Blackwell's, though the final result will likely come down to a heavy retail voting presence. So this is essentially like Succession in real life, right? When you have board seats and there is a fight for, who's going to control the company, what direction the company is going to go in. Like, this is real life. I don't know if you guys watch the HBO show. It's really good, though, called Succession. And it happens in real life, right? We've got these huge companies, especially the parallels here with Disney being a huge media company and that, show being about a huge media company. We've got a huge media company here and, a fight for control. And we'll get some clarity today regarding who will be on the board, what direction things will go. And it'll be exciting to follow along the way. Among influential proxy advisor firms, Glass Lewis has backed Disney's director slate, while ISS has supported Peltz's candidacy, but not Rasulo's. So it's kind of just a mess of people vying for power within the hierarchy of Disney. What's at stake? Notably, nobody's looking for the ouster of Iger, who has been at the helm almost continuously for 2 decades, but adding activist board members would serve as a distraction for his recovery plan. Since Iger's return to the CEO chair in November 2022, Disney's stock has risen 25% to Tuesday's close of 122.82. Guess who's been around for the whole ride? Us, baby. House of Mouse paying out week after week. Let's see here. Much of that gain, though, has come since the end of October when Iger foe Ike Perlmutter gave Trian power over his voting shares, raising Trian's stake to 33 million shares. Since that point, Disney shares have gained a whopping 53%. Yup, bring it in. Bring it in. Bring it in. 50%, baby. That's on the stock move, not even on the option contracts. So let's continue to make money off of Disney because, frankly, I don't care who's on the board. I don't care who does this. I don't care who does that. As long as the technicals tell me that it's still a great opportunity to make money, that's what I'm going to be involved in. And that steered us right this week as Disney has brought home thousands of percent of combined profit for us in the stock options made easy community. So if you're not a part of that, email me, adam@adamhollandeducates.com. Let's get to work. Right? Put that in the subject line. Let's get to work. And then we can talk about how we can get your money working for you in markets. In terms of commodities news, higher and higher. Gold futures notched a fresh all-time high on Wednesday above $2,300 an ounce, continuing a trend that had been seen for most of the past month. Demand has increased despite gains in the U.S. dollar and Treasury yields. Safe havens have also been in the spotlight amid concerns over a widening conflict in the Middle East, as well as bullish sentiment supported by strong physical demand from central banks and retail investors. Traders will closely watch Fed Chair Jay Powell's speech today for further insights into his policy outlook. What else is new? Gold is paying, and we're getting paid by gold. You love to see when you are involved in positions and those positions are making headlines, and you've been involved in the positions way before they started making headlines, right? FCX, GLD, GDX, these are tickers that have been making headlines recently, but we've been in them for a bit, right? We've been in them for weeks. And that is the virtue of this community that we have here. Being proactively positioned is so key. I don't want to know about something when it's at all-time highs. I don't want to know about something when it's breaking records. I don't want to know about something, right, when it's making headlines and everybody wants in. I want to know well before that so that I've already been positioned and I've already made profit as the headlines come, right? You don't want to buy the top on everything, and you don't save money by trying to scrounge up little pieces of information here and there, right? Get somewhere where there's a good quality pipeline of information, opportunities, and systems in order to execute and leverage those for your own financial gain, and then stay there, right? That is where you want to be, not the scrambling. The scrambling just wastes more time and causes more confusion because you hear, oh, Bitcoin's at all-time highs. Let me go get Bitcoin. Oh, gold's at all-time highs. Let me go get gold. Oh, Nvidia's at all-time highs. Let me go get Nvidia. And you're chasing everything at all-time highs. You're not getting in anything at a great spot. And then you blame the market as being rigged or, something being a scam because you're not successful. Break that habit. If you've seen that chain be something that's a pattern for you, don't continue to succumb to that, right? Do what you need to do in order to get where you need to get in whatever community you need to in order to have a consistent pipeline of value instead of you running over here. Oh, now it's this thing running over here, right? And you're chasing everything at all-time highs. It's not a fun life, right? And you end up holding the bag a lot more often than you'd like to. So let's see here. In terms of so gold futures notched a fresh all-time high on Wednesday at above $2,300 an ounce, continuing a trend that had been seen for most over the past month. Demand has increased despite gains in the U.S. dollar and Treasury yields. Safe havens have also been in the spotlight amid concerns over widening conflict in the Middle East, as well as bullish sentiment supported by strong physical demand from central banks and retail investors. Just to kind of summarize where we're at with gold again. Traders, of course, will be watching Jay Powell's speech today for further insight into policy outlook. That also is a nice little reminder that Powell is speaking today. So you want to, be aware of that, factor that into your expectations, and position yourself accordingly, right? He talks at noon today, 12:10. So make sure you tell your trusty voice assistant to remind you, that Powell is speaking at 12:10. And there will likely be somewhere to watch the stream of him speaking. In terms of consumer news, Just Walk Out. There had been high hopes for Amazon's Just Walk Out technology, but the system is being pulled from its fresh stores in the U.S. The automated grab-and-go tech used a combination of cameras and sensors to eliminate cashiers and checkout lines. Dash carts will be used instead, which will let shoppers track their spending and see their totals in real time. Quote, Just Walk Out will remain in Amazon Go stores and some fresh stores in the UK, but the e-commerce giant reportedly faced challenges in controlling costs and building support for the technology with other retailers. So again, we talked about it yesterday, talking about it again today. all of these different companies, quote unquote, fail in a ton of different areas. Do not think that you having to pivot or you having to shift or you having to change, right? Even if you're not driven to by the bottom line, you might not be losing money, right? Doing what you're doing. It just might not be what's meant for you at that time, right? So I just want to constantly throw out every time we see a big company do this so that you know, right, that people like Elon Musk declared bankruptcy and had tons of failed companies before they had companies that took off. Amazon, Apple, all of these companies that we see as like amazing and cutting edge and, you know, the future of tech, like they do things that don't work and then they move, or they might work but just don't work in the way that they want them to, so they pivot, or they just have a whole new direction in the way that they're going, and while this isn't killing them, it's not serving that purpose of that new direction, so they pivot, right? So for anybody who needs to hear this, and I'm going to continue to say it because there, you know, could be a ton of people here that are in that spot. Don't worry about the shame that you might face for having to make a pivot, because in reality, number one, people don't really care that much, and you know, number two, all of the biggest companies do it. So what you're doing is actually what all the most successful people do, you know. So that's just a little 2 cents going into it with my people who are like, oh, I don't know if I should make this change or do this or go there or work there or this, that, and the third, and what will my coworkers say if I went to this competitor? Like, at the end of the day, you've got to do what's best for you. The majority of the time we think people are talking about us and thinking about us, and they aren't. You know, and you just have to do what's best for you, right? So I encourage you to do what's best for you and continue to get 1% better, whatever that looks like. But don't be afraid to pivot or, you know, anything like that, because that's what keeps you alive. You staying on the same trajectory in a world that's changing each and every day makes no sense, right? It makes no sense. So in fact, you want to look, you know, more so to making sure you're keeping up with the world around you than being like, I started on this path, I'm going to continue on this path. Because I'm sure plenty of milkmen said that, and you don't see any milkmen nowadays, right? In terms of stock news, three-way split. General Electric has finally completed its breakup as its aerospace and energy businesses began trading separately on the New York Stock Exchange. Shares of GE Aerospace, ticker GE, the conglomerate's cash cow that kept the GE ticker, dropped 22% on Tuesday to reflect the changes. Meanwhile, power and renewable energy unit GE Vernova, ticker GEV, briefly rose over 5% before reversing course to end 1.4% lower. The third unit, GE Healthcare, was spun off last year, and its shares have performed well so far, bucking the trend of many spinoffs that have resulted in muted stock performances. Yeah, I don't really care much for GE. You know, good for them for splitting up, but it's not like any of those spin-off companies are too attractive to me. In terms of today's markets, looking mostly red across the board, with some green mixed in, kind of mixed both ways. In Asia, Japan down 1%, Hong Kong down 1.2%, China down 0.2%, India flat. London, we're down 0.3, Paris up 0.2, Frankfurt up 0.3, the Dow down 0.1%, S&P down 0.2, NASDAQ down 0.4, crude up 0.6, gold up 0.5, Bitcoin down 0.1. Today's economic calendar, we got an OPEC meeting. So we'll see, you know, what that conglomerate has to say. And then 9:45 PMI composite final data. So we've got, you know, that, and then ISM manufacturing service index at 10. So 9:45 a.m. / 10 a.m. we're getting, you know, little piece of information that could possibly cause some volatility in markets. So that's, you know, just something important to keep in the front of your mind over the course of the first 15 minutes, half hour of opening, that we do have those pieces of data. So if you see volatility, right, don't be like, oh my God, what's happening? You know, is China attacking this? Is Russia attacking that? It's likely that data that's dropping. What else is happening? Latest economic data, job openings roughly flat in February. Electric vehicle stocks under pressure after Tesla's delivery dud. Biden may be open to ending LNG export pause and push for Ukraine aid. Big buyback, Alibaba, ticker BABA, repurchased $4.8 billion in shares last quarter. Costco unveils weight loss program. Members may get Ozempic access. That's wild. Costco membership with tons of, you know, benefits like access to weight loss drugs. WeWork sees exit from Chapter 11 by end of May. Strongest earthquake in a quarter of a century rocks Taiwan. Wow. man, prayers up for Taiwan. They're already, kind of embroiled in that tension with China, and now they've got this earthquake that happened that is, very, very tough sledding there. Palantir Tech, ticker PLTR, reports 6.5% stake in MSP Recovery, whose ticker is LIFW. And then Apple's latest research suggests tech giant will be AI winner. So Apple's research on itself suggested it will be an AI winner. That's so funny. That's like being like, hey, I looked at my notes and I'm gonna crush it. Thanks, I guess. Like I'd like to see, what they have to say about why they'll be an AI winner, especially when they're out here trying to license other people's models and take advantage of what they have, presumably because what Apple has itself is not very good. Break-even margins before 2030. Intel reveals $7 billion loss in foundry unit. So that'll wrap us up and put a bow on it here this morning, April 3rd, 2024. There's a lot of news going on, a lot of trade opportunities that are happening. Make sure that you're here each and every morning and investing in yourself, right, in order to stay abreast of those opportunities and close the gap between where you are and where you want to be. Let's continue to succeed. We had a rocking Q1. Let's transition that into a rocking Q2 and continue to crush it, everybody. Have a good rest of the day. I'll see you back here tomorrow morning for our next pre-market prep session. Have a good one.